Hey guys, how's everyone doing? This is Nick from ForexForNoobs.com with the daily analysis. Today is Tuesday, the 29th of September, 2020. Time is 10:03 here in the UK. Sorry about the late start, guys. There was something weird happening with YouTube. It wouldn't let me go live. Don't know what that was about, but anyway, we're here. So let's get right into it. I'm going to switch up to a GBP CAD daily chart. Talk a little about these two trades here. So if you were still long on GBP CAD after last week, you should definitely be considering closing out now if it hasn't already hit your target. I think this trade's well and truly over at this point. So it ended up being a very, very good trade. It depends obviously where you got out. Some people got out on the pullback, some people got out on the initial move, some people held on right until the end. So it depends how you handled it. But good trade. Euro New Zealand, if you're in this one, again, you probably want to consider exiting. When we talked about this one originally, I suggested, I believe I suggested, and correct me if I'm wrong, the reason I placed this line here is because I said that this could be a problem for this pair. And it seems that it actually was a problem for the pair. I'm not quite sure if it's going to be able to break through here. Honestly, I would suggest probably just closing this one out if you haven't already, but I think most of you closed it out around about this level anyway. So that one is off the list. I'm pretty sure everyone's closed it out, and if not, like I said, you should probably close it out ASAP. All right, Gdp USD. Now, I shared this trade kind of on Sunday, saying that I was looking to open it. Well, I shared it on Friday, I believe, originally, but I never entered it on Friday. Actually, no, correction. I shared it on Wednesday last week. But it triggered on Friday. But on Friday, as I explained to you guys on the forum, I did not enter it. I just didn't want to enter a trade on Friday. It just didn't really make much sense to me to enter a trade on Friday. Just because there was pretty much no way it was going to start moving up by the end of Friday. And I didn't want sentiment to change over the weekend and for price to drop down, nor did I want price to gap down like crazy. Now, it didn't really gap down like crazy. If anything, it gapped up. Very minor gap up, but it gapped up. But anyway, long story short, this one was entered yesterday. A lot of you are in this one though. There was so much discussion on that forum post for this trade. When I said I entered, there was like at least, well, like countless people who said that they're in it also. There was a lot of discussion, a lot of excitement with this one as it shot up to here yesterday. And I tried to temper that excitement. I said, guys, don't get too excited because you're going to get, the more excited you get now, when it pulls back, you're going to get even sadder. And it did end up pulling back. And then all the discussion on this stopped because I think there are a lot of sad people out there annoyed that it didn't shoot up and hit their target right away. But that's just a trick of the trade, guys. I've been doing this for 20 years, almost. Don't get too excited over a trade just because it's moving in your direction. Usually it's just going to lead to tears when it comes back around, turns back around and heads towards your stop loss. Now this one hasn't headed towards our stop loss. It turned back around, got down to here, but today it's been making some progress. So hopefully today it breaks yesterday's high. That would be awesome, and it shoots up to target. I'm just saying, when you get that initial burst of movement up towards your target, don't get too excited because, you know, it's not uncommon, especially for GBP. It's not uncommon for it to drop back down like it did. But anyway, this is an active trade, so I should actually mark it as green. It's going really well for us right now. I'm hoping it makes a new high and it heads towards target. One thing with this one, we do have a bit of a choke point right here. This is where price turned around last time it tried to push up. So let me do that in blue so it's more visible. This is where it turned around last time it pushed up. So it got to here, turned around. So I'm worried a little bit about that choke point. If price stalls out heavily around there, I might consider an early exit. Otherwise, I'm just going to hold out for my 2R target, which is going to be right about the 1.3040. So yeah, let's just leave this one open. It's running nicely. Now, USDJPY, this is a potential setup I shared towards the end of last week. I'm just not that interested in this one anymore. It's been stalling out on top of resistance for 4 candles now, and we've been getting progressive higher lows rather. They're not significantly higher, but they are higher lows, and we've been getting higher highs. If we were to drop down to, let's say, the 30-minute, you would see that this is kind of starting to slope up. I just don't like it. I don't see any confirmation that sellers are strong here. I just don't like it. I know some of you are excited about it because I keep getting questions about USDJPY, but I don't like it. It doesn't look good to me. So I'm going to keep it as a potential trade. Maybe it turns around completely today, maybe, but it doesn't look very likely. I'm not excited for this one at all, and I'm probably not going to enter. New Zealand JPY, I decided to take a patient approach to this one. I wanted to be really patient, wait it out, and then it kind of slipped through my grasp. It had this big move up today. So basically, when I woke up, because I woke up quite early today, I looked at it and it had broken above my entry level. I didn't have a pending order set for this one. It had broken above my entry. So I said to myself, no problem. It'll probably pull back. And I was waiting for it to pull back down close to my entry level. So around about the 69.23. That's what I was looking for. Something like that. So I set an alarm there. But then it never really pulled back down. And it shot up all of a sudden at 9 a.m. Unfortunate. This one just kind of slipped straight through. I've not been able to enter this one. I know some of you are already in this one from last week. Some of you who weren't being as patient as me are already in it. And see, this is why I always say, patience is decent. It's a decent approach to take. That's the approach I take. I take the patient approach. I'm a bit of a patient trader. I wait for my opportunities. And that's great. It leads to a higher success rate. It leads to more winning trades, but it also leads to missing trades. See, I could have been in this one from Friday, right here, but I didn't enter. I was patient. I wanted to see some stronger signs that buyers were taking control of price, and my patience led to me missing what could be a very, very good trade. So, patience can be good, but it can also bite you sometimes. You don't have to take the same approach as me of being very patient. Had you not taken the same approach as me, you'd be in a trade that's going quite well right now. Now, there's nothing saying that it's going to continue to go well, but it's going well right now. So I know some of you are in this. I'm going to mark this as green. That way we can keep track of it. But just as a note, I'm personally not in this one. New Zealand USD. Now, as to ones I am in personally, this one I managed to get in before this big push up, and I know I didn't share it to the forum. I shared the initial setup to the forum, but I said to you guys, if I enter, I'm going to let you guys know on the forum, and it's just really unfortunate timing. I entered this one while I was out for a run. It pulled back, and I thought, okay, screw it, I'm going to enter. And I thought I'd have enough time to get back and tell you guys that I'm in it. But look at the 15-minute chart. By the time I got back, it had shot up so much that it's not really viable anymore. Now, I know a lot of you guys are in this one anyway, because I did share this one and I have been talking about it for a while. It's just, I'm really annoyed that it took off so fast, because there was literally 30 minutes from the time I entered to the time I got back and was ready to update you guys on the forum. That little 30 minute time is when it just shot up like crazy. It's unfortunate. But I know a lot of you guys are in it anyway. If you missed it, if you were waiting for me to give the okay, sorry, it's unfortunate. But also, if you were waiting for me to give the okay, that's not a great way to trade, really. Because I can't be there at every single moment of the day telling you that it's okay to enter a trade. So while I do feel bad about it, also realistically, every trader needs to stand on their own 2 feet, and you don't really have to wait for my go ahead to enter a trade. So yeah, it sucks. I'm in this one. I wish I could have shared it that 30 minutes earlier, but I couldn't. You know, technically when I'm out on a run, I could update the forum, but I literally stopped when this pulled back to take the trade real quick. My entry is actually a bit lower than this. And yeah, it is what it is. But like I said, based on the discussion, it seems like a lot of you in it, so all good. Euro AUD. Now this one, I know at least one person's in this one, Rohit from the forum, but no one really responded to his post, so I'm not sure if anyone else is in it. I responded saying that I'm not going to enter, but I know if more than one person's in it, I'll mark it as green. Is anyone else in Euro AUD short? Now, who just said they're in AUDUSD? Colin. You're in AUDUSD long. Not a bad setup at all. This is another one I believe I shared over the weekend. Was that right? Here's my weekend report. Oh no, I didn't share this one over the weekend, my bad. I think I shared this one on Thursday's analysis, maybe? So, Siamak is in your AUD also, Rohit. Siamak, just do a quick response, if you don't mind, to Rohit's post. Saying that you got into... I had enough on my plate with the majors like Gdp Usd, New Zealand USD, so I opted out of Euro AUD. It's unfortunate. It's moving quite nice though. So, and Colin, you're in AUD USD. Wow, there's a lot of open trades in the group, guys. I know someone that's in AUDCAD also, so a lot of the trades I shared towards the end of last week have triggered. You know what I'm gonna do? I'm going to mark the ones I'm in as well as you guys are in purple, just to make that distinction. So the ones that are purple are the trades that I'm in personally, and some of you guys are in. The trades that are green are ones that I didn't enter, but I shared, and other people are in them, other people in the group. So GP New Zealand, nothing happened here, so that one's off the list. And USDJPY, I'm going to keep it here, like I said, but I'm not that interested in it. So a lot of action. Last week was an amazing week. This week's shaping up to be a really nice week. Hopefully these trades push up to where we want them to go. Now let's look for some new setups. I really don't have much time today, so... Is anyone in the AUDJPY long? Take another quick look. All right, guys, I'm not really seeing many new setups because mostly everything triggered yesterday or this morning early. So there's nothing really new. I'll mark AUDJPY as green since Danny is in it. We got a lot of open trades. So between the whole group, me personally, I've got 3. Between the whole group, there's 3, 4, 5, 6, 7, 8 open trades on the daily charts. That's a bit abnormal for daily chart trading, but hey, let's hope all of these trades hit target. Yeah, I don't really have much else to say, guys. Are there any questions? There's no new setups, so now, can you enter? I guess the next question would actually be, can you enter any of these setups late? And the answer to that would be an absolute no. Maybe New Zealand USD. Maybe you can get into New Zealand USD if it pulls back a little. But if it pulls back, honestly, I wouldn't really be too happy. I wouldn't be too confident in it. Maybe you could get into New Zealand USD now. Let's look at the numbers. Technically you could, but it wouldn't be the best move. Nah, I don't like it. So yeah, I think that's it for the analysis, guys. If New Zealand USD pulls back to around my entry or maybe a little bit above, there is an opportunity to enter. Failing that, I would not enter right now, and all of these trades have moved too far to enter. I'm really annoyed with myself for missing New Zealand JPY. So New Zealand USD, I was waiting for the pullback, and the pullback happened. It was a big enough pullback on New Zealand USD to get into the trade, whereas, because if you look here, around about 9, it dropped all the way down. It was a big enough pullback to get into the trade, but New Zealand JPY, around about 9, it pulled back, but it never really got close to where my original planned entry was. It's really unfortunate because it's gone up so much. Out of the two, it looks like New Zealand JPY is the good one, is the better one, and I'm in the little underperforming brother of a New Zealand JPY. It is what it is. Yeah, I mean, if you see a pullback, sure, but I don't know, man. It's a trap. Trying to get into setups you've missed is a trap. And it's a trap that can cost you a lot if you make a habit of it. Because, like, think about it. If it pulls back, what does that mean for the trade? The best kinds of trades are, well, no, what happened with Gdp Usd yesterday, that's the second best kind of trade. A trade that takes off and then maybe has a pullback, but it stays well above your entry level. That's the second best type of trade. Any guesses what the first best is? I'll just spoil it for you guys. The first best is the one that just shoots straight up, hits your target, and you're out of the trade in an hour. That's an awesome trade. The second best is goes up, clears your entry, and then stays above it. Nice, I love that. That's good. Now, if New Zealand USD drops all the way back to my entry from here, that's a bad sign for my trade. That's not a good trade. That means that I've got it in because I think buyers are going to be in control of price. But then buyers are already failing right after I got in, and they're already pushing down to my entry or below it. Now, that doesn't mean I'm going to exit the trade. It just means it's not a great sign for the trade. So if you're already in the trade, stay in, because you can't exit a trade every time it pulls back. But if you're only planning to get in after the pullback, the original premise for entering the trade, which is the strength of buyers, you know, that's already gone because it's pulled back, and that's telling us right now that buyers aren't really as strong as we would like them to be. So the whole logic of entering on a pullback, I find it pretty flawed, if that makes sense. And on another subject, guys, our crazy American friends, I'm sure some of you in here are American, are having their election, and this promises to be an interesting one, you know, in terms of world history and world peace, because yeah, like if you're paying attention to the news, it could be like dramatized. I don't know. I got no idea. But whoever wins, there promises to be a lot of drama. If Trump wins, the left is going to be crazy. If Biden wins, the right is going to be crazy. Now, the reason I'm bringing this up is not to get political. The reason I bring this up is because of the impact it can have on trading. As we get closer and closer to the election, as the debates start, as George has kindly pointed out, the first debate tonight, I think we're going to start seeing a bigger and bigger impact on the US dollar. So, in my opinion, trading is going to get more and more dangerous the closer we get to the election. Now, we're about a month out, but it's going to get more and more dangerous the closer we get to the election. So, I'm going to be trading as safely as possible in the coming months. I'm going to be taking less overall trades. So normally the way I do my trading is, let's say I have a pair like a currency like the USD. Now I set a maximum exposure at any one time on the US dollar, which means I can have, let's say my maximum exposure on the US dollar is 5%. That means I can have 5 USD trades open at 1% risk per trade, or I can have 10 USD pairs open at 0.5 USD per trade, because 0.5 times 10 equals 5%. Or I can have 2 open, one at 3%, one at 2% risk. You get what I'm saying? My maximum exposure on the US dollar at any one time, if it's 5%, I can use that 5% on USD pairs however I want in terms, well, not really, because I have a maximum per trade also, but let's just for sake of discussion, I can use it however I want. But as soon as I hit that 5% limit, 5% risk, I do not take any more trades that involve the US dollar. So that's Gdp Usd, New Zealand USD, USD Jpy, USD CAD, so on and so forth. So limiting your exposure on a single currency is good practice, because if something crazy happens with that currency, the max you can possibly lose is whatever your maximum exposure is. Of course, slippage comes into play. You could lose a bit more, but generally speaking, the max you're going to lose is that whatever your exposure is on that currency. I'm lowering my exposure on all currencies. Now, why all currencies? Why am I lowering my exposure on the Aussie dollar because of the US election? Well, the USD affects every single currency pair because pretty much most of the currency pairs that aren't USD are cross pairs of USD and are calculated using the US dollar as a base. So AUDCAD is calculated by getting AUDUSD multiplied by USD CAD. That's how the rate of AUDCAD is calculated. If you find that confusing, there's an easy way to see how it all works. AUDUSD 0.7114, that's the current rate. Then you multiply it by the current rate of USD CAD. Where is our bloody USD CAD? Here it is. Multiplied by, and then I've lost it. Where is it? There it is. 1.3360. And what does that give us? It gives us the rate of AUDCAD. It's a little off because obviously it's changed a little bit since me typing in those numbers, and this is all calculated in real time. So it's a bit off. It's off by a pip, but you can see that that's how the rate's calculated. So everything is, all these cross pairs are dictated by the US dollar in a way. That's why they're cross pairs. So my point is, I'm going to lower my exposure on every single currency I trade. And I would recommend you doing the same. Now, I know a lot of you don't use exposure in your trading, and that's a big mistake that you're making right there. Because when you expose yourself too much on a currency pair, a surprise move can really, really hurt you. So you might have like 4 trades open and they all involve the euro, and then some dude who's important in the euro, some politician guy, economics guy, comes out and says something, then all your euro pairs go to absolute crap. All your euro trades go to absolute crap. And before you know it, you've lost like 6% of your account because you're like 1.5% risk on all 4 euro trades. You have to have a maximum exposure. That's just good practice. And that's how the professionals do it. So lowering my maximum exposure. But anyway, guys, I have someone at the door. I have an electrician coming. I said that this was going to be a short one. The electrician's a little late, so we went a little bit longer. But I need to get out of here. Thank you guys very much for attending. I'll see you for tomorrow's analysis. We can discuss all this stuff a little bit more in depth. Just for the next few months, we're going to have to be very careful with our trading. Lower your risk exposure, trade smart, but we'll talk more about that tomorrow. Thank you guys very much for attending, and I will see you for tomorrow's analysis, which is going to be at the same time of 10 a.m. Thank you and bye.